And interview after interview after interview, everyone's hinged on China GDP. I don't buy the single solution. Give us some nuance to what pros are watching within the China macroeconomic experiment.
Well, the biggest story today, Tom, and one of the biggest stories that everyone watches is that China's currency, the Yuan. It was heading for a near-decade low. There was a lot of talk that we might break the big seven, handle the psychological barrier. But of course, just as it weakened, we saw a sharp turnaround as our colleagues reported Chinese banks began to sell dollars and, of course, buy the Yuan in an attempt to support it. So it feels as though the government in Beijing is sending a very firm signal to the world that they want the Yuan to stay broadly stable. They're not going to let it slip too far, too fast. And indeed, we had the second in command of the central bank come out today with a very clear message for short sellers. He said they met him a few years ago, and we know how that finished them.
Okay, I don't want to get you in trouble, Enda, but let's look at Chinese renminbi right now. This is what Enda Curran just described. You can do this on the Bloomberg terminal. The broad weakening of Chinese yuan out to new yuan, really up near 6.97, and then down. Why did it strengthen? And is it a market function? Is it Beijing dialing 1-800 stop the devaluation? Why? What's the why of that move?
Well, our colleagues reported that Chinese banks began to sell dollars this afternoon. That's one of the reasons for sure. But we also have had plenty of rhetoric from officials, including Premier Li Keqiang today and the second in command of the central bank. Both are very explicitly saying that China will not devalue the yuan deliberately to soften the blow of the trade war. They are not about explicitly pushing it lower. The market is putting downward pressure on it, but they want to keep it broadly stable. And that has been their consistent message, and that appears to be how it's playing out in the market too. But Tom, going forward, I don't think anybody really thinks that downward pressure has gone away, given the trade war story, given the broader complexities behind that, by the way, in that it's so much more than just a dispute over the goods deficit, and given the slowing in China's own economy and the Fed heading the opposite direction and what that means for interest rates. There are plenty of reasons why the downward pressure on the yuan is going to stay with us, I think, for some time.
Okay, so Enda, is it a matter of when and not if renminbi touches 7, and what happens psychologically to China?
Well, that is the big question, Francine. The views are really split on that. Some people will tell you it's a psychologically very important level. It will trigger companies and savers to try and get their money out of the country, and we'll get back into this cycle of capital outflows and the central bank having to spend their reserves. But others say, really, we're already close to that level anyway. It doesn't have much further to go. As long as it passes through at a fairly gradual and stable decline, then the panic will subside and there won't be any rush to get money out of the country. So I think most people will say to you, yes, it's probably headed toward that direction, or at least that's where the pressure is pointing. But it's the pace of that move which is critical, and that will dictate how markets respond.